Hello traders, quick afternoon video, and I've been fighting a cold, and I laid back down, and it was almost 11 o'clock before I woke up, so I missed most of today's action. Of all days to sleep through what's going on here. I'm going to start with this chart which I found on Twitter. It shows just how much quantitative easing that China has been pumping into their economy this past month or two, and they're just completely throwing everything plus the kitchen sink at their economy to promote to support their economy here. And quite a when that's going on, it's really difficult to short these markets. And then you have that coupled with the fact that we have record buybacks in the markets here in the States and our tax cuts. So our two markets are really driving the world right now, and where Europe's really struggling, and we're sort of keeping things alive. So we'll see what happens. All this stimulus and stuff. I'm just going to go through a few of these charts, and then we'll go from there. Okay, and I don't want it just to be too long. Let me start with this direction over here. Give me 1 second. I can get this to load. Okay, I'm going to start with the bonds, U.S. bonds. We're going into the Brexit vote tomorrow, and yeah, we've got a little bit of responsive selling, but if you notice right here, the bonds are not giving a whole lot back. But I think the Brexit vote, they're not going to do anything. I mean, they're going to vote. They've got it rigged to where it gets thrown out the door anyway. If the markets are kind of anticipating the same thing, and if that's the case, if they do what the markets are pretty much expecting, politically, it'd be political suicide for them to do the way they got the vote set up for them to vote in favor of the vote over there in the UK. But once that happens, I think you're going to see a significant sell off in the TLT going into the rest of the week, which would be increasingly bullish for the markets. So just keep this one on watch. Um, I think that we're going to get a squeeze in our bonds. I'm going to start with SPY here. We are in a channel, and basically what's going on here, and why people are asking, why in the heck are we getting such a big move today? Well, basically, with the channel, I've got fib fans set up on my channels, and whenever you're coming down tagging the bottom of a channel like this, and you get a responsive bounce, this is the high volatility zone for the for this type of move, and that's exactly what we're seeing here. The higher volatility move. Now, when we came in today, this channel could have had a breakdown, of course, because we came down and we tested the yearly volume point of control, which is typically, we're going. That's the cross from bullish to bearish, and we came down Friday to that, and we had dual support here, and we got a responsive buy into the close, which are gapping up on extreme volume today. Okay, so this is a very bullish turn of events for the market, and if they do, like I said, do as expected on the Brexit, we could have a substantial bid in these markets this week. So keep that in mind. Just one of the scenarios I'm looking at here. On our Qs, similar situation. We're at the bottom of the channel. We're getting, we found support down here, getting a nice little bounce today. Now the Qs are holding out much better, especially with all the stimulus in China. I think we're going to get a run back to value area high in the next couple weeks, most likely. And look at how strong, and it's only getting stronger, it seems, here in the afternoon. I mean, my scans are just lighting up all over the place on volume here at 1:30 in the afternoon, which is typically is bland, and we're getting day high volume spikes. So just keep that in mind. With that kind of momentum coming into the markets, you cannot really fade it. The worst of the bunch would be your Russell. And basically, we're at the volume point of control. At the time I did the screencast, we're probably above it now. But this is the bullish area. This is the bearish area. And we are right here at this trend line. So, we'll see what happens here, but just keep your levels. If anything breaks the market, it's going to be your Russell, in my opinion. So just keep this one on your watch here. We did even fill the gap, so it was most of these indices weren't even filling this gap. And we're seeing relative weakness last week in the Russell, which, if the markets continue to go higher, of course, Russell's going to get bought, most likely. The diamonds are pretty much, we're breaking out of this trend, but likely sideways. Boeing really broke this channel this morning, and it's likely we're going to trend sideways, or we might even hug this bottom line for several weeks. Keep that one on your watch. It's going to go with the markets, but even despite the fact we're breaking this trend line, it's only 30 stocks, and you don't want to read too much into the fact that we're breaking this trend. It's much more important that the 2,000 stocks, that breadth is much more important than the 30 stocks here, in my opinion. Okay. FXI. This might be stronger now, actually. But this is a responsive sell point for the China markets. So that's kind of the reason when I was doing these charts, I was thinking that we were nearing a top for the day in the markets. But since then, we've actually had more buying pressure coming into the markets. So just keep this one on your watch. This is an area that China is likely to struggle with, at least until some of the news events this week settle out. So that suggests to me that China may not have a big driving force. But we're seeing this great big huge pop in U.S. equities. We could very well see it tomorrow in the Chinese equities too, but I think it's kind of range bound this week on the China stocks from here. XLF. Okay, this was concerning me earlier, which I haven't done an update right now, but XLF was underperforming the SPY. I mean, they were both doing well, but the fact that it was lagging, I was really wanting to see the XLF to lead to the upside. And we can do a real quick check here and see how things are shaping up. And sorry about that. Okay, we're up 1.33% on the SPY now. And then the XLF. Give me 1 second here. 1.19. So it's still lagging a little bit. So this is a little more bearish take on the markets, in my opinion, because this should be a responsive buy zone for our financials. And I think it has a lot to do with the bonds. The bonds haven't really fallen out of bed yet. So if things happen the way I expect them to happen and the bonds collapse after the Brexit vote or into the Brexit vote, then tomorrow could be a very hot day for the financials. Just keep that in mind for your trading purposes. One of the main changes, and I put this on my weekend video about how Apple was setting up for a long. Basically, I see this area down here that's been basing. I see Apple has been accumulating. This is accumulation of Apple to buy back their shares. And we're finally seeing the 200-day, 4-hour chart crossing to the bullish side. It's really looking bullish. We've already filled this gap. I'm thinking by the end of the week, we could very potentially see 185 for Apple. And this is a major driving backbone support for the markets. Another one. Sorry about all these down here. It's going to take a little bit too much time to mess with it. EWG, this is our Germany, and we do have that Brexit vote. It's in this area that should be seeing very strong volatility, a strong volatility move to the upside, but it's lagging right here going into this Brexit vote. And there's a lot of problems in Germany or in Europe, the EU. They can't do stimulus like the rest of the world. So while the U.S. and China are doing stimulus, this area is really in some trouble. So that you always have to keep a very close eye on what's going on in Germany. But this is the yearly value area buy zone to accumulate to the long side on the German DAX. So keep that in mind. We are on the bullish side along with the rest of the markets and above our 200 SMA on the 4-hour. So keep that in mind. A lot of reasons to think that things the rest of the week could be very nice for the markets. And then we saw some responsive, my quick scans. I saw some very strong short squeeze going on in General Electric today. It was catching my scans. And then Ambarella here this little earlier is trying to break out of this channel. Had a nice little gap up on earnings, which immediately got sold back off. And now it looks like they are trying to resolve to higher prices on that one. And let's see my scans real quick and see how they've updated here lately. 1 second. And the main thing I want to point out on this scan, as you can see, all these companies are scanning up in this for weeks and weeks now. I've been getting on my 10-minute scans this time in the afternoon. I'm lucky to get any results at all on a volume spike increase this time of the day. And look at this, a few minutes ago, I was pushing over 90 on the scan. Now we're still at 28. And basically all day, I've come up with my 10-minute scans and we're getting volumes. People are coming in and they are buying up this market and they are loading. I really think the rest of the week is going to be extremely strong. So we'll see what happens and we'll have to go from there. That's it on my video. Like it if you like it. Please leave me comments below and stuff like that. And if you wouldn't mind, my Twitter handle is Gumby9662C. Be sure and follow me on Twitter and reshare my video to your friends and family and stuff. And hopefully we can all learn together, okay? Thanks a lot, and I will see you tomorrow.